Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
We're going to do an Audible right now. This is a joy. This could be a 3-hour interview. Monica Guerra is at Morgan Stanley. She's looking at bigger Washington policy, the election and all that. She comes out of the trenches of Fitch Ratings and had a tour of duty. And I mean, this is like the Marines coming out of the trenches for the city of New York as Director of Capital Budget and Economic Development. I got to go to an Audible here. I don't want you to comment on the political mess in the city of New York. I do want you, is by far and away the number one expert we have on the future fiscal integrity of this great city. How does it look to Monica Guerra?
Well, to me, I think that it does ultimately look good. One of the things that the city does, they have this midnight budgeting move where they never have money. There's all this infighting within the city council. And then at the last minute, they'll come through with a finalized budget. As far as, handling the, addressing the bigger, sort of elephant in the room, I don't want to name any names, et cetera. But, we are looking at a potential for change, right? And so the thing you got to remember is that politics are cyclical, they change, people move on.
Okay, LaGuardia, dump of America. Newark is dump of America.
Thank you very much.
Number two dump of America, LaGuardia, just rated best airport in the country. It costs $8 billion, whatever, to do. Do we have the big city vision to maintain the growth rate, the little g, to take care of our fiscal proclivities here in New York City?
There is, a pendulum that swings, right? So we went from, I guess to name check Bloomberg since we're here, from a very, pro-business environment, something that was more socially focused. And we see that at the federal level as well, right? Where there are changes in trends. And so I don't think that this is, a dead end, right? We can definitely continue to capitalize on everything that makes us.
I got to do a disclaimer here. Of course, Michael Bloomberg, of course, signing the checks for me and Paul. Not Lisa's check. That's signed by someone else. Mr. Bloomberg, of course, part of what we do each and every day. The former mayor of New York and future owner of the New York Yankees.
Monica, what are you telling your clients, Morgan Stanley Wealth Management? I'm sure you get it 1,000 times a day over the last several months. How do you game out this election? How do you position your portfolios? What are you telling your clients here? Because we're going to have an election next Tuesday, whether we like it or not.
Right. Well, one of the things that I emphasize over and over and over again is that Congress is ultimately more important in those sector and industry outlooks. The president sets the tone, essentially, is a big part in those final deal-making measures, but we have to see what happens in the House and Senate. And right now, as we stand, obviously I'm not calling the election, things could change. The Senate looks like it's going to go to the GOP. The House looks like it's going to go to the Democrats.
Okay.
Now, the best sort of news around that is that markets love gridlock and they outperform under both a split government scenario in Congress, but also when you have a unified Congress and an opposition president. And so I really like to emphasize that we have to watch what happens there, especially around taxes. And if we're going to position to really focus on those tax mitigation strategies, if we're looking at any potential changes that could, increase that number.
So how do you think this is going to, if we do have that kind of split government here, what are you telling the Morgan Stanley clients to do here? Is it just like, don't worry about it, stick with if you're long equities or long bonds or whatever, what are you telling the clients there? What are the advisors asking you, I guess?
Yeah, in the near term, it's stick to that long-term strategy because around election day, you're going to have increased volatility. We could have rolling volatility until the election is decided. And even though we have created both Democratic and Republican long baskets, and the Republican long baskets have been outperforming the Democratic baskets by 13%, we don't say pile in.
So who's been outperforming again?
The Republican long basket.
Okay, the basket.
Yes.
And what's a Republican basket?
So the Republican basket includes 12 different ETFs that cover essentially
Callaway
sectors
golf.
and industries. Sectors and industries that would benefit from policy proposals that come out of the GOP.
Oh, okay.
So those would be things
What's
like...
a Democratic basket look like?
The Democratic basket, it would be your
Atlanta
clean
Braves.
energy, like clean energy, things like, Medicare, managed care,
Right.
beneficiaries, et cetera. And on the GOP side, you're looking
Right.
at traditional energy as sort of a real juxtaposition.
I'm just going to go to the zeitgeist right now. I got 8 ways to go here, but Obamacare supposedly under some threat. I see in the zeitgeist, Axios and others, David Guerra telling me the Republicans begging the Trump campaign to stay away from Obamacare. Is Obamacare a sacred cow?
I think it's symbolic. There's not much more that can be done to undercut Obamacare in the ACA.
What does Obamacare cost Lisa Mateo on her 1040 tax form? The belief is I'm paying for Obamacare. Am I? Is Lisa Mateo paying for Obamacare?
You can opt in right through the state exchanges, and so that's the important thing. You can opt in, and so it's a broader exchange that you can participate in. Now, what we are all paying for, right, is the Medicare, Medicaid surtax. So that's a set number. Now, one of the things that I do want to highlight as far as broader risk is, folks are looking or sort of signaling that there might be tides moving towards a Trump win. We see that in the betting markets. You see that with, again, the baskets that I just highlighted, or ETF baskets. But I really want to caution when we're thinking about risk that because of how tight this race is, if you pile in on that, that could also be your biggest loss. So right now, when we're giving guidance, it's hold off. Let's wait and see what happens with Congress, and then we can position.
I mean, how are you thinking about the timing of this? I mean, we might not know for days or even weeks, some people are suggesting about how this, so that's just another level of risk for investors to deal with,
right.
Presumably.
Heightened volatility, but again, it's just emphasizing especially from wealth perspective, when we're talking to retail, point in time,
Right.
Stay focused and disciplined.
You're like, you can just tell she chews glass. I mean, she's in a
I'm
meeting,
not
and
playing
there's
around.
no Zoom meetings with Monica Guerra. What are you going to do with the New York Yankees? I mean, you go down to Tampa here in spring training. What is the Monica Guerra prescription for the dreaded New York Yankees?
I don't have one. I don't follow baseball. I'm sorry.
Good, you're
I'm
qualified.
sorry.
You're qualified.
I'm sorry.
All right, let me ask you this, for our John Tucker, our congestion correspondent. What happened to our congestion tax?
I
We
mean,
got all the cameras up on Lexington
It's
Avenue.
okay. You can have a mimosa while you answer.
yeah. I mean, when I've been smoking, so we'll
All
see.
right,
We'll
all
see.
right. Very good. Monica Guerra, thank you so much. We appreciate it.
Thanks.
Monica Guerra, head of U.S. policy at Morgan Stanley Wealth Management.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Dan Ives joins us now with a report from Yankee Stadium. How was that fifth inning, Mr. Ives?
That was a brutal fifth inning as a Yankee fan. But it was wild to watch. Congrats to the Dodgers, but just an exciting night at the stadium.
Spin the wheel of fortune right now for Amazon and Apple this afternoon. After what you've seen in Mag 7, what's the wheel of fortune look like for those two stocks this afternoon?
I think Wheel of Fortune's bullish, specifically for Amazon on the cloud side. I think that's going to be the upside there, as well as advertising. And for Apple, as we've talked about, this will be a better than expected iPhone number. And I think optimistic in terms of Cook going into what I believe is just going to be a monster December holiday season for iPhone 16 AI driving that.
Yeah, I upgraded, so I got to figure everybody else is too. It took me 5 years to upgrade. How about let's go back to Microsoft last night. I thought the number was solid across the board. I mean, and I know people are a little bit concerned about maybe their cloud business. Give us your read on our friends from Microsoft.
Paul, I'm more bullish today than I was 24 hours ago. I think it's a pound the table because Azure, you're seeing growth accelerating from an AI perspective. I think Street will kind of try to pick hairs here, split hairs in terms of the numbers. This is one you walk away more bullish. I would be shocked if this is a stock that's not up 24 hours from now, given what we see in terms of core numbers.
So how do you think about the Microsoft story, and specifically in the cloud? Just give us a sense of their competitive positioning versus Amazon versus Google and some of the other players there.
Sure. So to give perspective, let's say a year ago, no growth essentially from AI that's attributed to Azure, maybe 1%. Today, 12% of the growth is AI driven. So in terms of their backyard on the enterprise, 34% growth, AI is driving that. Now others are getting in on that party. Google, I see what we'll see from Amazon tonight, but it just speaks to the AI revolution. It's only the second inning as this all plays out. And you look at Meta, look at that CapEx. I mean, they're spending money like a 1980s rock star, but that's great for NVIDIA and great for AI.
I mean, Dan, foreigners are loving the growth. And I think American Wall Street said, well, look, we took the CFA, we did this course. This isn't good. I got a PE on Microsoft of 35. I got a forward PE to June of next year of 33-ish. To me, the issue which you're good at, and even people less optimistic than you are good at, is the x-axis. How do we treat the terminal value of our analysis of the Mag 7?
What would happen if Dodgers didn't spend the last 2 years? Do they have a chip right now? The point is, you look at what's happening in terms of where this is all going. I mean, in my opinion, some of the parts, the AI piece could ultimately add $30 to $40 per share. As this all plays out in terms of the story, because I think the street is underestimating the next 2, 3, 4 years of free cash flow, growth, and what AI ultimately is going to do to the story.
I mean, help me with Call of Duty. They just came out with it here. I saw up 61% for that. Nobody talks about this, and I just think it's an absolute sleeper. The new Call of Duty's killing it, right? Black Ops 6.
Oh, boy.
Yeah, look, if you look at Activision, I mean, what they've done there, I mean, there's so many growth levers in the Microsoft story, more than we've ever seen. Leading AI, you got Activision in the back pocket, and now what you're really seeing is just a massive upgrade across enterprise, which is bullish for Google, bullish for Amazon, and of course, very bullish for Godfather of AI, Jensen, NVIDIA. And the last piece of that puzzle is the consumer AI revolution. We hear from Cupertino tonight and Cook.
I mean, Paul, the zombies, the Liberty Falls zombies in the new Call of Duty. I was on that for like 2 hours last night.
Oh, I'm sure you were. When you're not on the Gram or on Facebook. Meta platforms, let's switch gears there, Dan. That's been kind of the best performing, a big cap stock here, up 67% year to date. Digital advertising, it's still a thing, isn't it?
I mean, that's the hearts and lungs of the story. And I think now you could criticize them for what they're going to spend CapEx in terms of AI, but that's the next lever of the growth story. So when you look at Meta, I think we're only sort of still in the early days of this growth transformation. And that's very important as this all plays out. We see from them, see from Google. Right. I think we'll see from Amazon as well.
So you got a paragraph, like in, CFA 101, risk factors. What's Dan? I mean, you're wicked bullish. I get it. People making fun. You're a pinata, Dan. I mean, were people coming up with you last night asking for price targets on Microsoft? Like in the sixth inning? I will tell you when I was going to get a beverage at the Yankees game, and someone said, "Hey, should I be worried about Apple?" There you go.
So there is some nervousness, but again, that just creates the opportunity. This is a tech bull market that's going to go on.
Okay, but what's your lead?
24 months.
We got to go. What's your lead risk factor here on Apple or Amazon today? There's a paragraph. Dan Ives' major risk factor is?
Lead risk factor is just good, but maybe conservative guidance. Street will kind of read into that knee jerk. That just creates the golden buying opportunity to pound the table.
How do the Mets look next year, Dan? Got to go. How do the Mets look?
I'm optimistic on Mets. Hopefully Mets, they'll be in the World Series.
Oh, come on. Steve Cohen, Juan Soto, match made in heaven.
Exactly.
Thank you, Dan. That's good. With Wedbush.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Brian Levitt with us now, Chief Market Strategist, Invesco. Good morning to you. You walked in and you said you're really not focused on the election. Get us beyond the election. Frankly, get us beyond the inauguration. What does that do to give you confidence to participate in the equity markets?
Yeah, I always tell people that the things I like to focus on is the direction of the economy and what the Federal Reserve is going to do. And so I try to avoid a lot of the other noise that enters unless the outcomes to certain things meaningfully change the direction of the economy or what the Fed's going to do. And I think the latest reports, the numbers that were just read, are very consistent with what we're seeing, which is a resilient economy and inflation in the comfort zone. And so that's a nice backdrop for risk assets, and very little to suggest that this is an economy that's losing steam. And so, it's a backdrop in which equities are still likely to be favored.
Earnings matter. As a former equity analyst, I like to think earnings matter. It's not just the Fed. What have you seen so far from this earnings cycle? What do you think the market needs to see?
Well, there's been a lot of focus on the mega caps, and it's been a little bit mixed with the mega caps. And yet the irony of it is you're seeing the numbers come in with double-digit growth, just perhaps slightly below what the expectation was, or maybe a little bit of weaker guidance. The reality is those names which have been driving the markets right now are multi-year stories. It's hard to look at them as a quarter-over-quarter story. They're multi-year. We do.
Why do we? Is it just the industry?
Yeah, it's just the industry.
Something to do?
Yeah, I mean, because it's sentiment gets out ahead of itself, and we either rear it back in or take it further. But the reality is those are companies you should be looking at over multi-year periods. But in terms of thinking about it tactically, yeah, good economic backdrop.
Let's go to Paul Sweeney on this. I'm going to ask right now if I can do the math. I'm waiting for the gerbil to move. I got to pay the terminal.
I know.
I'm behind on it. There's 69 opinions on Microsoft.
Yeah.
Paul Sweeney, do we need 69 opinions on any given stock?
No, that just goes to the inefficiencies of Wall Street here. Do we need 69 voices on Microsoft? Probably not. Maybe 10 of them are getting paid, probably. Brian, talk to us about kind of some
Whoa, there was a little,
Exactly.
There was a little bit of, folks, inside baseball.
Yeah,
there from
exactly
Mr.
right.
Sweeney. Continue.
What have you seen here? Well, what are some of the sectors that screen well for you guys? If the economy is generally in a pretty good space, rates are coming down, what sectors screen well for you guys?
Yeah, if you believe that we're going to get through this environment, with the economy intact and rates coming down, you want to be more cyclical in your exposure. And so, we've had a period of here where our tactical indicators said, be a little bit more defensive in here. Things are going to be a little bit challenged in the short term, but I think that looking out into 2025, more of a pickup in activity with rates coming down, and that should favor the more cyclical parts of the economy.
Financials? What's the call on financials? Because I saw some Jamie Dimon, Brian Moynihan putting up some big numbers this quarter.
Big numbers, and we would expect M&A activity to pick up, some animal spirits, and this normalization of the yield curve, which certainly helps the banks.
Is cash an asset? It's really what it comes down to in terms of people's. Let's assume most people are behind SPX this year. What do you do with cash? How do you deploy right now?
The funny thing, Tom, is we've been telling people to get out of cash now for a year and a half. Right. So I guess
that worked out.
At some point, the S&P 500 up 20-something% this year. The cash looks good. The problem you have with it, of course, is the reinvestment risk. And every time yields come down, you think investors lost their chance to lock in the 4 or 5%. And I guess this is the third bite at that apple. I do think that rates are going to moderate. I think rates are probably a buy here, and so investors sitting in cash will at some point find yields coming down significantly below the short rate and below the long rate, and you'll want to have been exposed to things like credit or things like longer duration treasuries.
How about credit risk here? How much credit risk do I want to take? Because in fixed income space this year,
spreads still like record tight.
Super tight, right? Yeah.
Spreads are tight, but yields are reasonably attractive, and the fundamentals look quite good. I mean, usually when you look at, you're going into a worrisome credit backdrop, you usually see double-digit borrowing growth. We're nowhere near that right now.
We got a metal bar, folks, around our desk here. We have the nicest radio studio in all of radio done. It's got fancy screens up here, and
thanks, Anthony.
It's really, and what you don't know is the metal bar is here to take our heart rate. The average heart rate of Mateo, Levitt, and Sweeney is like a 49. And it's Lisa, help me here. Peloton's up 25%.
Pre-market.
And they just announced a new CEO.
New CEO?
Yeah.
They go from 160 to 3.
I know.
You told me to buy. I remember you telling me to buy. I did not. I mean, Brian Levitt, you're so. Do I need the Bike Plus from Peloton? Is that the new Peloton, the way to go here?
Well, I mean, I think as long as you eat healthy and you move, that's my advice.
Lisa Mateo. She eats healthy and she moves.
Regardless of how we do it.
But sitting on a bar stool in an Irish pub, that's not the way to go.
It doesn't seem like the best approach, but
That's how I'm going, Lisa.
Seems like the fun approach.
Is the exuberance there at Invesco across a huge platform you have? Is there individual stock exuberance to pick on PTON? Or to pick on Microsoft or Apple, Amazon today? Are people engaged in the market or not? I don't see it.
They're not. I mean, it's not the irrational exuberance that you usually see at the end of cycles. There's still a lot of money. I mean, you can look at 17 trillion in deposits. You can look at 6.5 trillion in money markets. That's a lot of money that's still sitting there. I talk to our portfolio managers every time I go and grab a cup of coffee. They seem pretty optimistic at what they're looking at. And, I think a lot of it comes down to the fact that you coming off of a year in which things were good, but concentrated in a handful of names, versus if you bring rates down, the economy stays resilient. That broadens out to other parts of the market that have not participated. And whether you look at things like mid cap or more value oriented parts of the market, those portfolio managers are excited.
Brian, we don't care. The only reason we had you in, we needed an outside expert on Penn State, Ohio State.
He's
so
a
it's
Michigan
a rebuilding year at Michigan.
It is.
I mean, come on, the Nittany Lions 7-0, but against the Heritage, the juggernaut of the Buckeyes. What do you think?
I think I'm going Buckeyes on this one, but
probably pretty. I don't know. I'm going to stick with my Penn State.
You're going Penn State.
Yeah, I mean, I got a great coach, as my producer will attest, and we'll stick with it. We'll see. But they're always waiting for the Ohio State Michigan game. That's what
even in a
the whole year comes down to for those.
We
guys.
are, and we're going. And if anyone has tickets, let me know, because the price on those things are still astronomical.
Where are we playing this year?
We're playing in Columbus.
Oh, okay.
And you're going.
We're going, and we had to fly to Cincinnati and drive to Columbus because it's impossible to get there, and there's no tickets to be found right now.
Wow. See?
Well, they can be found. You're just paying a pretty price for them.
Ohio State, Michigan. That's what it's all about.
Your Penn State, Ohio State, Michigan update there.
Yep,
We
there
thank
you
Brian
go.
Levitt
All
for
things
that
Big Ten.
surveillance. We're rebuilding your correspondent. Brian Levitt, Invesco, thank you so much.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
This is the conversation with someone with deep experience on trade. I want you to push aside every single pundit and expert. The path here is from Michael Froman to Robert Lighthizer. And these are the two individuals that have most studied and affected a trade policy for the United States of America. Mr. Froman has moved on from his public service to President Obama, to President of the Council on Foreign Relations, and importantly has written a new report, a new essay, I should say, on the new Washington Consensus. Michael, it's a required read for any student going back to Smoot-Hawley. Do we have a new Washington Consensus that you and Mr. Lighthizer could agree upon?
Well, look, I think the old Washington Consensus, which was really about hyper-globalization and all the benefits of global integration, I think that has very much been weakened. I think we have the beginnings of a new consensus, but there are a lot of unanswered questions still to address. And that's what that essay talks about, which is a lot of the actions that we're thinking about taking to reduce our dependence on China, whether it's export controls or constraints on foreign investment or protectionism. Those also come with costs, like raising inflation or raising the cost of living. And we need to address those trade-offs and create some sort of framework going forward if we're going to pursue those kinds of tools.
But the heart of it within the polarization of America, and we see this with the minted Nobel laureates, Acemoglu, Robinson, and Johnson, the heart of the matter is the separation of America into elites looking for some form of post-World II benevolent egalitarian trade policy, and everybody else saying we're getting killed. How do we bring that? How do we amend that together beside permanent polarization?
Well, I think first we should recognize that that on one hand, globalization has achieved some of the most significant gains in human history in terms of reducing poverty, lifting hundreds of millions, if not a billion or more people out of poverty, increased competitiveness, spread technology around the world. There have been a lot of positives to it. I think all along, we knew that there are winners and losers in globalization, and that hopefully the economy makes up for people who lose out from globalization by creating new jobs, new industries that they go into. But that's not been simultaneous. And we've seen the deindustrialization of certain communities in the US, and that has had a real negative impact on those workers, those communities, and their families. I think, Tom, the real issue is trade policy or globalization itself is not enough. I think we always needs to be accompanied by domestic policies that are designed to ensure that workers survive and thrive in a rapidly changing economy, whether that change comes from technology, think about AI, or from trade or from immigration. And we have not had a domestic policy agenda under either Democratic or Republican administrations that have successfully dealt with that.
So is globalization dead? I mean, there's probably a couple of generations of us that have grown up with the whole concept of globalization. Where are we? Is this a bump on the road, or is this something more fundamental?
Well, first of all, it's certainly not dead. The trade is at an all-time high. It's not growing as much as it was before. It used to outstrip global growth. Now it's somewhat behind global growth, but it is still growing. And what we're seeing are changing patterns of trade. And so rather than being overly dependent on China, we're seeing supply chains beginning to move. Not necessarily people pulling out of China, although there's been some of that, but more as companies think about where to put their next factory. They're either thinking about putting it in the United States or in some other market, Vietnam, Mexico, Malaysia, Thailand, elsewhere. And so that is still globalization, but it's reflecting that it's not just about efficiency anymore. You don't necessarily go to the most efficient place to produce, because there are other issues that are important too, other values like redundancy, resilience, diversification, and national security. And we're now balancing efficiency against those other values. And that's another trade-off, again, that I think the next administration is going to really have to wrestle with if we're going to have an enduring consensus.
Tariffs. Boy, they're not just one party talking tariffs. It seems like everybody's talking tariffs these days to varying degrees. How do you view tariffs?
Well, tariffs, first of all, are ultimately paid by the end user. We know that, whether it's a consumer product or whether it's the importer, perhaps a manufacturer in the U.S. who's paying a tariff on an input they need for their production process. So it makes things more expensive. And when it comes to the consumer, low-income consumers spend a disproportionate amount of their income on tradable goods like clothing and footwear and things of that sort. And so it's really a regressive tax on them.
Mike, I got time for one more question. Nick Burns is nailing diplomacy in China. His Twitter feed is a State Department mandate read. He's on the train. He's driving all over China on the train, going to see things, moving it forward. Is Nick Burns on your short list if we do get a President Harris as Secretary of State?
Well, nobody's asking me for my list, but Nick Burns is an incredible diplomat, incredible public servant. He's doing a fantastic job there, as he's done in his previous jobs, and he would be a great asset to any administration.
Is Michael Froman on your short list for Secretary of State? I'm busting.
No, I'm very happy at the Council on Foreign Relations, and I'm honored to have served 15 years in government, and I'm delighted to be at the Council on Foreign
Never
Relations.
Returning again to Bloomberg Surveillance. Michael Froman with the Council on Foreign Relations. I can't say enough about the essays in foreign affairs. Whatever your politics, folks, it's just absolutely fabulous.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.